Wow, it's been a long time since I recorded a video for you guys. I've been a bit busy with life and other things. As I explained earlier in my first videos, I'm a med student, so I just graduated, and I came from church today, and I realized since it's been a while, let me record a video for you guys. And I actually promised to be consistent from now onwards because life and other things got in the way. Well, this is Simon and this is FX. Let's get to it. So, as I said before, it's been a while since I recorded, and don't get me wrong, it's not like I wasn't trading during this period of time. It's just that I never found the time to sit down and share my point of view on the markets over these few days. And well, of course, I have noticed how the market has been changing. I made a couple thousands during the course of time, of course, but then again, I'm going to post a video on that. And not only that, I'm planning to also post or start a series or showing you my mistakes as a way to keep track to my promise. So I promise you to be as transparent as I can, because over the past few months I've been a bit rusty. Don't get me wrong, I've been a bit rusty, and yeah, so it was very hard to cope, especially with how the markets are flowing right now. So I've lost, I've gained as well, and yeah, but that's not the main aim of today's video. I am going to run you through the market outlook for the new week ahead, that is 20th of July towards 27th of July. This will be my third video in the weekly forecast series, and I think third if not fourth. Well, if you have not seen the videos, of course you can go check my page and you'll see them. And not only that, you can also check my other videos where I explain my strategy and yeah, everything. But first things first, how do I do this? Should I drag this? I think I'm supposed to drag this to the side of my screen so that you can be able to see what my screen is. Yeah. So let's go. Okay, so let me just walk you through simple things that I'm gonna. Okay, I've already done the introduction. So yeah, the previous week was a bit interesting. If you think about it, it was interesting. It was indeed interesting because gold, tanked, silver tanked as well. The dollar had a different story, tracking back from the upper, like the lower week. Is it the lower? Like the previous week, you get. So it was a bit interesting. Yeah, people made lots of money selling gold, buying the dollar, and yeah, it was interesting. Let me show you. Yeah, so I'm gonna keep this small checklist right there so that I can be able to see. I'll be coming in and coming off of this checklist there. So well, yeah, the week was interesting. So I'm gonna do a very bold thing right now. I am going to delete everything that is in the charts because I want this exchange to be as raw as it can. I'm gonna do the same for gold as well because I've been drawing a lot. I've been drawing a lot. I'm just gonna leave the fair value gaps because I'll explain which ones to use, which ones not to use, and all that. Yeah, so this is gonna take a while. Done. And the rest of the charts that I'm going to upload are going to be fresh charts, new charts for both me and you to interact with and look at them. Now, first things first. Let's see, what is our first things first? Yeah, so how was last week? Well, if we look at the dollar, for example, the dollar story, Last week was a bit, oh, I didn't clear the dollar. Interesting. Supposed to stay true to my word, but anyways, I'll clear it, don't worry. Yeah, so first things first, we have, I did this analysis with a student of mine. Last week, I was trying to explain to them how the dollar story is going to be important for us when we are approaching trading for this week that has just ended. So I had explained that, let me just use, I just explained to the student that if we get a sweep of this line here is our swing low. Of course, delete this. Yeah, if we get a sweep of this line, which if you see clearly is what we got, we would expect to see price, going upward, continuing upward. And if we get a run of this, that is, if this candle closes below, then that means we will get a, price moving lower towards other fair value gaps. Yeah. So as you know me, and as you know my strategy, I strictly trade fair value gaps and swing lows and swing highs. That is the rejection points that fair value gap leaves. So this here is the rejection point that the fair value gap left a couple weeks back, and so price has just reacted towards this point here and closed above. So from this simple analysis here, we could expect to see more upside, yeah. And not only that, also if it would have closed below, we would be expecting to see lower price action. But then again, if you zoom out, this is a very critical level for the dollar, because the dollar has been, sort of dilly-dallying at this, like sort of consolidating over the past year. Exactly, over the past year. If you look at from July, or actually May, this is May when it administers this high, and all up today, it's almost a whole year has passed in some months. So we have not seen any significant moves, but it's in this consolidation that we got the famous gold rally towards 5,000 or silver towards 120. So that's how the dollar is actually very important. Now the dollar is affected by a couple of things. Yeah, the dollar is affected by a couple of things. Before I analyze it, I just talk about them. We have yields. Let me just make it big. Yeah, there you go. The dollar is affected by yields. Now I am not an economist of any sort, but oh yeah, that's my roommate. So I don't have any what's it called? Why am I loading? Yeah, I don't have any economics knowledge of any sort, but I know for one, yields affects the dollar, and not only that, we have, what else do we have? We have geopolitics also affect the dollar. Yeah, because especially oil prices, because oil is factored in dollar prices. We sell, like, the global markets accept oil prices by the dollar, so we have oil as well. And not only that, we have things like I swear to God, I forgot something interesting. We'll remember it. So if we talk about these yields, yields and bonds, actually it's yields and bonds. So since if we even observe the charts for yields, we would see that the yields are pushing higher and higher. Let me see if I can get something. Yields. Is it? Yeah. US 220. Yeah. US 20 government bond yields. There you go. What's this? Yeah, go to symbol. Is this the symbol? Oh, here's the symbol. Yep, there it is. So over time, there's been an increase in price, in yield prices. If we factor in the moment the dollar was consolidating, all the way to until now, to this very moment, we would see that the yields are rising. And don't get me wrong, I'm not saying they have a hand-to-hand correlation, but I'm saying certain factors affect the dollar prices to be printed upwards or lower. And the moment you saw the dollar dropping, it was because the yields was dropping. Now, I just discovered this. I didn't know, and that is why I'm even recording a video today. I did not know that, and I'm guessing this is not the right chart. Yeah, because there is 20 years, there is 20Y, there is 10Y, there is 2Y. There is different ones. So I don't think even this is the right chart, but I'm just trying to show you the correlation to this. Gold, this is what I discovered. Gold, silver, I mean commodities, they go hand in hand with yields as well. So this magnificent rise to the upside for yields can be countered by the magnificent sell-off from gold. You understand? This magnificent choppiness that you see here from the yields goes hand in hand with the one that happened or is happening now on gold. So that is how yields and yields and the gold relate. So will I be using the yield chart to, you know, compare my analysis to gold? Well, not mostly. I'm still learning through this, so I don't want to give you information that's gonna throw you off. I will be strictly technical, strictly fundamental, and slightly sentimental. That is, I'll show you how I see my crowd sentiment over the charts. So will I use this? No, I'm just showing you what I discovered. So as much as the dollar is also responsible for gold prices to, you know, rise and fall, then there's yields. I mean, if talk about you're learning every day, Forex is very funny. Yeah, so when you think you know, something just comes up and you do not know. So now you have to relearn shit, you have to relearn stuff, and you have to make sure you are up to date. Yeah, so before I forget my plan, let me just see. Yeah, there it is. So now I want us to scan ahead, because I don't know if I'll do a quick walkthrough from each and every single pair. So most likely what I'll do is I will explain the pairs as I plan ahead. You understand? So before, like, without wasting any time, I'll just start with the dollar situation as it is. So we have known the dollar to be consolidative over the past years, and as you can see on the screen right now, the dollar has been, oh god, funny story, I was recording the screen and I did not realize that the recording cancelled for some reason, but I think it did not cancel, so I got a bit scared. Yeah, so as I say, very rusty in this, so this is going to be a very raw video. Of course I edit it, but yeah, very raw as it gets. Anyways, let's continue. So where was I? Yes, so I'll have to just do this quickly, switch my screen, and bam, we made it. Now, so dollar story. We've been consolidating, we've been choppy over the past months. So that is from May last year to now we are approaching August. And my story wouldn't be as different compared to last week's story. If we zoom closer to current price action, we would see, yes, a series of fair value gaps respected as we went up from May this year all the way towards, the high that was printed in June. And now we are in July and we're right there at price. So when I was explaining this to my student, we looked into this fair value gaps and the possibility of price coming in and respecting such fair value gaps. So yeah, so what am I expecting to see? First of all, if I start in the weekly, yeah, 1 week, there you go. My bias doesn't change a lot if I talk about the weekly, because I still feel like with whatever is going on in the world, you know, geopolitics and other issues, we can still say the dollar still has some potential to move to the upside. Yeah, even though the economic state of the United States of America isn't supportive for the dollar to, you know, rise in value because of the ongoing inflation in the country and just the data that has been printed a couple of weeks ago concerning how inflation is affecting their prices, the producer prices, together with the consumer prices. So if we talk about something, the board like the Federal Reserve of America, the Federal Bank, or whatever, trying to make sure that the citizens are living well accommodated, so they'll be forced to either, you know, hike price rates or lower price rates. I mean, is it price rates? No, interest rates. Yeah, the right word is interest rates. So the general political story, coupled with the country's ongoing economical situation, would inform us how much potential this has to, you know, to go upwards. But then again, I still think technically we still have some slight push over to the upside, particularly to this level of 101.96, maybe 102, you get. So this is my significant point to say, oh, you know what, maybe then we will see some price lower. But if not for that, then I think the dollar still has potential, still has room to buy, because remember, this is one huge consolidation block, and we could you know, go all the way to this point. Now, after seeing this in the weekly, I'm gonna change these words later on when I'm settled. I'm not gonna do that. But as I said, my bias for the dollar for this week is bullish, because this has succeeded. This one has succeeded. This has not. So I'm gonna delete these. I'm gonna leave with this, because this is what we call a sweep. A sweep is when price closes above a significant swing high or low. In this case, this one here is your significant swing low. So now we may see price going upwards. How will I approach this? I would look for buys. Sorry, I look for buys going upward. So the closest fair value gap we have is here. So I don't know, maybe if we open lower and, you know, respect this gap before we go upwards, that will also be fine. I wouldn't mind. But anything above this region that will push me upwards, particularly in the 4 hour, because since we've just checked the weekly, we are bound to check the 4 hour. And now in the 4 hour, you will see you have this fair value gap here that has been respected whilst having, oh, where is it? Yeah. I'm lost again, guys. This is why it is important to, you know, brush off your skills, do a mock-up video before making an original one. But then again, but then again, it doesn't matter, because I just shave it off and press escape. Just need to press escape, guys. Yeah. So I wanted to use my tools now. This is it. If I go full screen, yeah, so these are the only tools I need anyways. So in the 4 hour, since I did my analysis in the weekly, in the 4 hour is where I will now opt to take my trades, dollar trades. So this is what we see as a practical application of inverse fair value gap situation, where you have your bearish fair value gap right here fading. There you go. I just mark it like that. Your bearish fair value gap fading, your bullish fair value gap succeeding, and now you have price only pushing upwards. I would love to see for price to, you know, keep going like that, reach this fair value gap, get some resistance a bit, and then, you know, keep going in a beautiful uptrend like that. So this is for strictly the dollar. So if you trade dollar futures, if you trade, mind you, I've not talked about the majors yet, because the majors, the currencies have different strengths. I'll show you. The currencies have different strengths, so it depends on how strong a certain currency is to get your bias. But if we opt to buy, this is how I'll be looking at it. Yeah. So what does my checklist say for me to do next? Yeah. So my checklist said I should do years. I've talked about years slightly. I've talked about dollars. I think I'll save gold and silver for last. I just go straight to the majors because they tie directly to the dollar. So if this is my story for the Yeah, for the dollar, like if I want it to go up, this is how I'll look at it. But however, chances are it will fail. As we say, the dollar, I mean, Forex is still a probability market, not a possibility market. Like, you know, the price of bread now is 80. That's certain unless things change. However, Forex is very volatile and it's very, yeah, it moves a lot. Things change. So it's not like you have one sure prediction to a thing. So if you think price will buy, price can also sell. So what would I do? What would I be looking at if I will be thinking for dollar sales? Because somebody else would argue, like, oh, you know, we're already in a downtrend like that. Yeah, see, we're already in a downtrend, something like that, and you know, we shouldn't be looking at, you know, potential buys. We should be looking at more sales, etc., because we're in a downtrend, and they would be right as well. So you should always have two biases when it comes to things. I'll be leaning more on the dollar strength side rather than dollar weakness side because of whatever is going on in the world, you understand, geopolitically and whatsoever. I'll get to that, don't worry. So if I was to sell this, I would also observe this point, the one I marked now, 100.65. So if we get, you know, a strong close below, maintaining this downtrend, and then yeah, I would definitely say we are, you know, and then disrespecting this fair value gaps as we go low. So I'll then say, yeah, okay, you know, we're looking for downside. Now, without wasting more time, let me just take this out. No, I'll leave this. When I sit down alone later, I will reanalyze. Yeah, I'm thinking also maybe of doing two parts of this video so I cannot make it long. Maybe the first part would just include the dollar and USD pairs, and then the next part would include gold, silver, and other. Yeah, so two videos for my weekly analysis, just to make things shorter and less, you know, bulky, as I learn to talk less when it comes to explaining this. I'm very enthusiastic when it comes to explaining Forex. People who I teach know this. I would actually just talk a lot, maybe because, I don't know, I love the process. Yeah, so yeah, so what does I say? See, I even sidetracked a bit. So yeah, so let me just do this teaching charts, and then where is it? Okay, so there. Wow. Okay, so let me just do this. Add section. Just hide this. I'm trying something out, so that's why you keep seeing volatility. I'll talk about it when I get the time of it. Right, this is not important. So, yep, this you have them. So let's start with GBPUSD quickly. We just skim through, as I said. I took a mock-up trade right here on a different broker. Yeah, so that it's okay. All is well. Now, any things to observe? Of course, we're starting the weekly. Since we said the dollar has a chance to buy, we could be looking at, you know, sell-off opportunities for GBPUSD. We've been stuck at a consolidative range for over months because, you know, pound, dollar, same relativity. And then now we have a fair value gap printed below. I'm trying to hide this, I don't know if I can, but it's okay. So yeah, we have a fair value gap just at the support level of this consolidation tract. So maybe we could expect to see more upside like that, you know. Or now this is where it gets interesting. Let me just delete this. This is useless. This is where it gets interesting, because in the weekly scenario we see that price has swept. You see, price has swept this rejection high of this fair value gap. So maybe we could be open to see price to move lower all the way to this fair value gap first before we get a rejection from this fair value gap all the way outwards, like that. You get, or from this fair value gap here we could see even more rejection to the downside. So simple. But as far as we have the dollar buying, we have to approach every other major, as far as we have the dollar buying, we have to approach every other major currency pair differently because they go in tandem, except for one. You'll see it. Yeah, so that's my story for GBP USD. I'll be looking for lower prices because we got a sweep here, so I'll be looking for lower prices. And how would I enter? Go straight to the 4-hour, no need for me to check the daily. Yeah, so the 4-hour is already giving me clear signs of me to, get in. How? I'm seeing this huge fair value gap, this bullish fair value gap fading. That's one thing. And I'm seeing bearish fair value gaps being respected right there. So now my cue for entry would be this current fair value gap created here fading as well. If it fails, then that will be my sign to enter this trade and then keep going as low as it can get, probably to these levels there. So now we have something like that, or even ultimately all the way towards that. Yeah, so I'm sorry this doesn't look as pretty, but then again, it's okay. Yeah, I'll be sending pictures, I'll be updating on this very YouTube page how my trades are going if I take these trades. Yeah, so that's that. So next we have the EURUSD. Let's just do EURUSD first because I think it's gonna be the same. EURUSD story quickly in the weekly is the same. Consolidation, very choppy consolidation. We had a sweep here, price pushing lower. We had this fair value gap fading. So if you had sold during this time of the year, you would have gotten bank. If you would have bought from this sweep here, you would have gotten bank. And now we are in the same scenario where you have a small fair value gap here printed a couple of weeks ago fading. That's step one. Step two, now you have this fair value gap succeeding, going downwards. And now price just entered, price just entered this fair value gap here. So we could think next week we may have potential downside because the dollar is rising, this would fall. How would I take this trade? Now go down lower time frames and I would see, yes, this fair value gap being respected. That's the end in the weekly. And this fair value gap fading, this fair value gap being created. So if we get a price opening upward, we could get get in and then a quick get out like that. You understand? So that's that. And the same would be for, this is UJ. I'll talk about UJ. Let's start talking about this is the bonds. Let me just put this last, put it there, put it there. Yeah, so same will be for NZDUSD and AUDUSD respectively, even though they just announced their interest rate situations a couple weeks ago. I'm still thinking this fair value gap would fail because of dollar strength to push price, to keep pushing price lower. But I will still observe this existing fair value gap right there. I'm supposed to turn this around. This existing fair value gap right there to see if it will be respected or not, or this existing fair value gap right here to see if it will be respected or not, to tail my trade. All of this in the 4 hour. Yeah, and the NZDUSD as well. What is it? Now NZDUSD is like that, slightly weaker compared to the AUDUSD. That's why you see huge moves upward, huge moves downwards, and slightly weaker even compared to the dollar. So your weekly scenario would be something like this. The longest, choppiest consolidation since 2023, of course. And then you have, we're still respecting this level as a quote-unquote support level. We're seeing this fair value gap fail right here, and we're seeing a certain sweep here. Let me mark this. So this is where now currency strength comes into fruition, because the way currency is compared to another would also determine if your bias is going to be strong or not strong paired to the dollar, right? NZD is slightly weaker compared to the dollar, but this over the past few weeks there's been some interest issues going on in the New Zealand, so it's gonna make it a bit stronger compared to the dollar. So hence this move here. But I think we are at a level where the New Zealand dollar would cool off compared to the dollar, and with whatever is going on in the world, cause a chance for it to sell off like that. So this fair value gap is also key to observe, but then again we have the whole week to see what we get. If we get a sweep above, then we're gonna dump like that. If not, we could see New Zealand dollar reach these levels, but not next week, guys. When I say these levels, I mean over time, not particularly between 20th and 25th of Friday. Now we have the USD dash pairs, where we had said that we could potentially see price going up. We see USDCHF respecting beautifully fair value gaps. I remember I was at one point in time for USDCHF, I was at this point, and I had said, you know what, this candle looks beautiful, it's a hammer candle, maybe next week we'll buy, but then it consolidated for a couple weeks, so I let it slide, I left it, and then I never got an opportunity to enter here, so maybe I would have just been patient and gotten something during the month of June. But then again, I was on and off, and I don't usually trade USDCHF that much because of the morning spreads. They're huge spreads, very huge spreads, so I avoided CHF pairs as well. But yeah, this is classic FVG rejection. But then again, this is where currency strength pairs in, because for some you would see a very strong rejection upwards, but this doesn't show strong rejection upwards. This still signals that maybe price will drop. So all of this will be told on market open on Monday, and with whatever is going on the CHF franc side, we will see, Swiss franc side, we will see if this will play out. Maybe more consolidation because this is weak, but what with a currency pair that will push price higher from a fair value gap would be something like the Canadian dollar. Yeah. Oh my god. So you see, the franc is less strong. Is it? Yeah, less strong compared to the Canadian dollar, because now you see something like this. That one closing candle for the week is like this, and now the other one is just like this. So it gives you perspective when it comes to analyzing measures, because lots of factors led it to this. There was news events, there was PMI, CPIs, and PPIs, CPIs for the week, and then now you have something like that. So what am I looking at? I'm looking at because this is already a fairly fair value gap, as you can see in the weekly, a beautiful fairly fair value gap. So even though the dollar would be buying as it was, or as it should be buying from my analysis, did I say buy? I must have said buy. Yeah, I said buy. So yeah, even if you look at it keenly, this isn't a strong rejection, but because we expect price in and then shoot outside like this, price in, shoot outside. So price entered in 3 times, but we got the sweep. So that's why we're a bit skeptical. We may be bullish, of course, but then again, we're not getting a strong second rejection from the fair value gap. So that's why we can be a bit conservative in this. That's why you don't give a clear indication that, oh, okay, we should buy, because fair value gap rejection should be something like this: tap in, move, tap in, move. We've tapped in once, we consolidated for like the second week, and then now we have another tap in like this. Mind you, this second week was because of news events like CPI, the inflation stuff that I told you about. So that's what made it like that. So maybe the sweep will push price upwards. But talking about the Canadian dollar, we got a sweep as well from this area. You see, we closed above, yes, but it wasn't strong to keep price upwards. And then we got a significant dump at the end of the week. So we could see a continuation in that story like that. Maybe it was this fair value gap and then rejection, then it was this fair value gap and then rejections, all the way to these lows, or as I said, we could just keep upholding the dollar bias. That is, maybe get into this fair value gap, because price has to look for a point where it can, you understand, go from. Price doesn't just go I don't know, without a plan. Price looks for a point to address from. So this would be the significant point. Maybe price will get in here, then go. Maybe price will disrespect fair value gap, then we go lower. So I'll observe this area of 13886, probably 1389, then we'll see. Lastly, now we have the UJ. Now a lot is going on when it comes to UJ. A lot. First of all, we just reached a significant high. This is the highest point UJ has ever reached in years, around the 163 level. So, and apparently the Bank of Japan usually intervenes when such situations happen. And how do they intervene? They devalue, or they revalue the Japanese yen currency by buying strong, by investing more in the currency. More like, it's not like they're printing the money. There is something they do. There's some economic terminology for it. I forgot about it. But yeah, so that's why you get sharp corrective moves like this. You understand? Sharp corrective moves like this. Whenever we reach a price level of 162, 163, you get sharp corrective moves like this. That is why I say the UJ would be a currency to observe when it comes to these things. Now, they've already done a couple other interventions over time. The first major intervention that was recorded was the one that happened way back. I think UJ dropped to as low as 140. Is it? Is this the one? This should be the one. Or it should be this one. I don't know. Yeah, but I think this is the one. Yeah. So this just dropped to one. Yeah, no, this is the one. Yeah. Anyways, I keep forgetting that I'm in the weekly chart, so time is condensed. So you see, when price was almost at the highs, it tanked beautifully, and whoever sold it, and it was during even around this time of July. So market has a repetitive factor where you have some things like this repeating themselves over and over again. Now, I wouldn't be quick to say, you know, UJ is gonna sell, and you know, maybe intervention incoming, but I wouldn't be quick to do that. I would just rely on technicals in this place, because this is a right intervention. Intervention incoming. I wouldn't be too quick to rely on, you know, just the charts as well. As a trader, you have to be very keen to observe what necessarily causes price to move. So if I look at whatever is going on in the fundamental world, which I'm going to go quickly through in the last sections of the video before I quickly go and make the second part of this, which is called silver analysis. Yeah, so yes, we are at the very point where price could tank. You get at the very point where price would tank. Now, I wouldn't be dumb enough to say, oh, let me just you know, I'll make so much money, it will drop to 140. No, that's not how we do this. Even though price has repetitiveness, I wouldn't expect something like this to happen. Maybe it won't. Maybe it won't. I should be able to have two sides of this story. Now, what is my first side of the story? The first side of the story would be something as simple as, let me just take this out of the way. And this. First thing of this story would be something like, oh, okay, first of all, we have a beautiful uptrend like that. Let's acknowledge that. Two, this high right here, let me take this out too. Should I? Yeah, I mean, this high right here has gotten two sweeps before a break and close above. That's another thing. Now we zoom closer. And we see, what do we see? We see fair value gaps being respected. We're seeing fair value gaps being disrespected. All the way pushing price upward, maintaining that significant uptrend like that. That's 3. Now, what is 4? 4 is what happens at this immediate price action. A couple of weeks back, we got the CPI and PPI news. So this don't count particularly. Why? Because these news are usually just like this. They push price up, they push price down, push price up, because they're inflation news. Inflation usually gives the market some scare, you understand? It's purely economic stuff, I'm sorry. I'm a doctor, by the way, so the way I know these things is actually amazing. But anyways, inflation gives people fear because things are expensive. So this is what happens during inflation weeks, consolidations like that. So you have a whole week where price doesn't move up or it is repriced now like that. So this is the real deal. We are approaching a new week with less news whatsoever. So I'm expecting to see the following. If we maintain this uptrend, maybe fair value gaps being respected, previous fair value gaps from this week, before we continue upward. If we are expected to go down, we expect maybe a speedy correction towards this point here, where now we have a disrespect of this fair value gap swing low. And then from here, we have now price, and then from here, we could have price coming back to this point, respecting more bearish fair value gaps and disrespecting bullish fair value gaps as we go. That is how it is. That is how it should be. How would I approach this market scenario? I would go lower time frames and look for entry levels like fair value gaps and whatnot. Now, I'll just take this out of the way, or just leave them in the week. I'll just leave them in the weekly time frame. Sorry. Leave them in the weekly time frame. Yeah. Now, as I said, we've had a scenario where we still have a beautiful uptrend. Now we have this was a move I made money from, and I also missed at one point. I made money from this move because I thought this is the intervention date coming. It had dropped, it had pulled back, and I was like, yeah, it's gonna intervene again, and it dropped. Now from this point, I was like, oh, maybe it will keep going down, and I kept losing, so I took a break. That's not the end of the story. A new video is coming which is pointing out my mistakes that gladly explain all of my mistakes. But then again, see what is happening. We are at the highest point of UJ, highest point ever recorded, mind you, and we are being choppy like that. This is what is making people think maybe UJ will sell. But the markets are full of surprises. You're not supposed to lean onto one direction. So, as we said, if you're looking to see upward prices, I'm expecting to form fair value gaps at this direction. We have this bullish fair value gap here being respected. So if we get price action upward like that into fair value gaps, then more upward, then that is when I'll take the prices. But remember, this is a key resistance level. So something like this will be very, very hard to pinpoint, because at any moment in time, price will just disrespect this fair value gaps and then start to print prices lower, and then the intervention would have begun. So that is that. Let me just go through the 1 second. 1 second came back. So on your screen now you will see the news page that I use mostly. That is Forex Factory. I have another one, it's called the Economic Calendar, but this doesn't give as much information as it can, in all honesty. It just highlights it pinpoints the activities that happen. It doesn't necessarily give details and stories behind it. I mean, even if it did, it's not as keen to follow through the activities. So yeah, if you go to, I just use Forex Factory like that. If you go to Forex Factory and in this section here, you use the filter button, and then yeah, put in all the news, and then apply like that, and then now in the time scope you could put next week, and it will give you, oh no, it's actually this week, and it will give you everything from today, Sunday, all the way towards Saturday. So if you apply, it will give you all the news. Now if you quickly zoom out to see currency wise how much news do we have a pretty fair amount, but nothing for the USD, nothing for the dollar. Why am I saying nothing for the dollar more than 3 times? More than 3 times. Why am I saying nothing? Because the dollar is controlled by many other things. You don't need to see dollar news to actually see price action from the dollar. So even though we have unemployment claims on Thursday, we have all other things that will potentially make our bias positive in the other major currencies. Now we have this one. This is the big one. US launches new airstrikes on Iran after 2 US soldiers killed. Well, sad for the soldiers and their families, but then again, this is like, I don't know, somebody is trying to piss Trump off. I don't know. Currently, US has been fighting Iran over the Strait of Hormuz, and they have been going back and forth, like very back and forth, you understand? So what this would lead to is some adjustments, or like rapid rises and rapid fall of the dollar price action on market open. That is in my time today at 12 a.m. So why am I saying this now? Because from stuff like this and from, you know, tweets, Trump tweets, is when you could possibly get, you know, news weirdly. So the dollar is heavily manipulated by whatever the president of the country says and whatever is happening with this war scenario here. So even though the dollar doesn't have any news, you could potentially see rapid or volatile movements for the dollar. Now that is it for me at this first section, and I know it's very long because I included a couple other pairs. What I'm going to do now is tune in into the second video where I explain to you how gold and silver is going to act up this week. But what I'm going to do with gold and silver is I'm not going only to give you this week's analysis. I'm going to try to break down as much as possible how gold and silver is going to track over time. Like, what am I to look at? What am I to expect? Even though I've already hinted about it a bit, that is the yields. And what am I going to look at? How am I going to play my bias when it comes to reading? When it comes to seeing my bias, when it comes to if I want to buy or sell, stuff like that. Yeah. So I'm gonna say thank you for your time right now because I took lots of it, and sorry maybe because I've been rusty in this, but see you in the next one, like in the immediate next one. Peace.